Is audible.
Okay. That. So good morning to all. Today is day 2. So yesterday we discussed these management accounting objectives, functions, scope. What are the tools of management accounting or techniques of management accounting? This part in day 1 we discussed. Today is day 2. We are going to discuss today's agenda is the difference between the financial accounting and management accounting. The second one is the difference between management accounting and cost accounting. Third part is we are going to discuss the conventions of management accounting. And the fourth one is that we are going to discuss what is financial statement analysis, what are the different types of forms available, what are different types of forms. So it is management accounting class, English medium. Stop check, it is a management accounting. Okay. So we know that the difference between financial accounting and the management accounting. So financial accounting is an accounting system that focus on how to prepare the finance statement. It's an end-to-end process. But whereas this management accounting system is related to information provided to management. Okay, it provides management and to make a policies or frame the plans and taking a strategies for running a business effectively is known as management accounting. So whereas the financial accounting is a purely historical database, right? It's only the historical base. The orientation also for financial accounting is purely historical base. I mean the things already happened. Okay. So as per 1st April to 31st March, whatever the transactions are done in the business, we posted the transaction, start with voucher to end with balance sheets. But whereas the management accounting is focusing on the future, based on historical data, the management predict the future things. So future company profits, future company growth, or future shareholders earnings, right? And the management accounting predict the future, whereas the financial accounting historical base. So both the data usage, whatever the financial accounting data and management accounting data usage. So as per the financial accounting data used for both internal as well as external purpose. So what is the external users? The external users are see that government, tax authorities, okay, or concerned ministry, concerned industries, NASCAM, or FICCI. These are the external bodies are also know this company performance, right? The tax authority also know this company performance. So similarly, internal company management, company shareholders, okay, and see that in external parties, borrowers also, right? Those are giving the loan to the firm. They want to know these company profitabilities, company solvency ratios, right? So whatever the risk is there, is a debt-free company or it's a debt-based company, what kind of the risk is involving to give a loan to a particular firm. But whereas the management accounting is only in internal users, right? Internal use nothing but the top level, middle level, lower level. Management people know that what is the company's strength and weaknesses, and know how they can increase the company effectively. So what kind of decision they want to take, and also what kind of tool they can use. So internal purpose they can use this management accounting. So what is the nature of statement prepared? So generally financial accounting prepared financial statements like, so what are the financial statement? Anyone please share your thoughts. What are the financial statements? What are the financial statements? Anyone? What are the financial statements? What are the financial statements? Anyone? It is income statement and balance sheets. This is general purpose, right? So whereas this management purpose, this specific finance statements were prepared, like a comparative statement, common statement, trend analysis, okay? And also we go for preparing the cash flow statement, fund flow statement, and changes in working capital statements. Like we prepared various statements, right? It gives this idea for business to take the decisions will be taken. the rules. See, you can see here rule. So management accounting, there is no specific rule, there is no specific formats to prepare this statement. But whereas this financial statement, there is a rule is there as per GAC, General Accepted Accounting Principles. So all listed companies, all registered companies, they have to follow the GAP procedure, right? But whereas this management accounting, there is no specific rule, there is no fixed rule, right? Because management is a unit, right? The management is differ for firm to firm, nature to firm to firm, industry to industry. So it is differ for manufacturing industry and as well as service industry. So there is no specific rule and procedures. The reports, the only financial aspects, but here financial accounting considered only the financial aspects. But whereas these management accounting considered both financial as well as non-financial aspects also, right? And see the time span. So this time span, naturally the financial accounting prepared for year ones, whereas this SEBI registered company, they need to prepare quarter-wise income statements. Right? We'll see the news channels, first quarter result, second quarter result, third quarter result. So those are listed in the stock exchange. They have to submit they have to prepare the quarterly statement, quarterly income statements. But the management reports are prepared whenever management needs. There is no specific time, either quarterly or yearly, anytime they can prepare the management accounting reports. So the object is very clear. The objective of the finance statements are, it is a periodical report. The periodical report is quarterly or 1 year. But here, the management accounting objective is to assist the internal management to plan decision-making process by providing the information, right? So these are the, and also determine information for various matters. So required to publish and audited with statutory audits. So as per Companies Act 2013 and Companies Act 1956, so all the company has to go for audits, right? So statutory audit is also required if it is a new firm. And also see that this management accounting, no need to publish the data and no need to audit also required. It is only internal purpose. Okay, internal purpose. But whereas the format is also, and as per Companies Act, there is a specific formats are there. How you prepared income statement or balance sheet, there is specified formats are there. So all the firms have to follow similar kind of formats or specimens. But management, whereas management company, management accounting, there is no specific formats, there is no specific rules or regulations. So like these are the difference between management accounting and financial accounting. Now we'll go for another difference between cost accounting and management accounting. Now these three branches of accounting, right? Accounting has 3 branches: financial accounting, cost accounting, and management accounting. Now we are going to discuss the difference between cost accounting and management accounting. Right? There are 2 different purposes are there. Different purpose. Please mute. Please mute. Please mute. Vishal. Vishal, please mute. Vishal, please mute. Vishal, please mute.
Sir, if they don't mute, you remove them, sir.
Sorry? Yeah. So like the difference between cost and management accounting, the cost accounting objective and purpose is different, whereas the management accounting purpose is also different. So cost account, the main objectives, so they have to control the cost and cost ascertainment, cost controlling the major objective of cost accounting. Whereas this management accounting concerned with the information provided to management to take decisions regarding to company, regarding to planning, controlling, and evaluation of performance, how to evaluate the performance. So evaluation, maybe we compare our firm performance to similar firm performance, or we will compare our performance to the industry performance, and we'll take decisions. So like the management accounting is very useful to take this evaluation process also. The cost account system used for quantitative cost data that can be measured in monetary terms. So it uses only the quantitative data. So whereas the management accounting use both quantitative and qualitative data. Okay, it is please don't disturb the class. Please remove all this right. Please remove. And both they can use. So determination of cost and cost control, the prime object of cost accounting. So whereas the management accounting effectiveness and efficient, the performance of concern as a primary goal of management accounting. So there are two different objectives of this cost accounting and management accounting. So success of cost accounting does not depend upon the management information system. So why? Because cost accounting focusing on the cost aspects. So see that they want to know that what is the prime cost, works cost, factory cost, and what is the portion of direct cost involving, what is the portion of indirect cost involving, what is the amount, how much cost involving as variable cost and fixed cost. So what is the ratio? All they want to know that cost accounting. So whereas the management accounting depends upon the sound accounting system and as well as cost accounting system. So management accounting, management wants to know that both cost data plus account data. They require both. But whereas this cost accounting considered only were cost data only. They won't consider this financial data. But here they required, management required both financial accounting data as well as cost account data. Then only they can take a good decision. They can take a good decision based on this data available, both cost and management. So here you can see that the cost accounting related data obtained from financial accounting is the base for cost accounting. But whereas the management accounting, both cost accounting data is required, management account data is also required. So it provides future cost related decisions based on the historical information only. So what historical information, based on historical information, it provides the data for past and present. So whereas this decision management accounting take a decision based on the present and past, and they will predict the future decision making. Cost accounting report useful for management as well as the shareholders, the creditors of your concern. Means what is the how much cost involving to produce the products, right? Is like the firm is efficiently produce a product or not. But whereas the management accounting prepared the reports exclusive for meant for this management. If the scope is very limited management accounting. It's only cost accounting principles in financial management accounting. There is no specific principle. So they followed both principles of cost accounting as well as the principles of financial accounting. So statutory audit for cost account report are necessary in some cases, especially the big houses. If it is a multinational companies, if it is a public undertaking company, they required audits. Audit is mandatory, but no one can audit these management reports. It is only information, right? The cost accounting restricted to only cost related data. But whereas this management accounting is used for both cost accounting and financial accounting data. Then this is the very one question we're expecting in examination in management accounting. So explain the difference between cost, financial, and management accounting. So you can note down this one question for examination point of view, right? So this is one question, and the first question is, we are expecting the examiner may also ask, define management accounting, explain function, scope, objectives of management accounting. That is one question. The second question is explain the difference relationship between cost accounting, financial accounting, and management accounting. So these two are questions that we can expect in end examinations. Okay. So then after this part, now we move to what are the conventions of cost accounting as well as conventions of management accounting. So management accounting is interpretation of data. It provides basis of drawing fruitful conclusions, right? So data, yesterday also we discussed that the number is 6 or 9. So like how best we are interpretation of data. Some of the conventions like accounting also some conventions, cost account some conventions. So here also similarly, the management accounting also some conventions. Responsibility accounting. The main object of responsible accounting is encouragement of employees to do work with utmost great care and not to unnecessary irrelevant work. So we require the management. No, every employee knows that. So it is my institute, it is my company. So I need to work properly. So like it is a responsibility of each employee wise, executive wise, management wise, and the departments also. Everyone feels some responsibility to doing the work. And in practice, in practice, efforts are being exercised to control happening to unfavorable events. And moreover, responsibility is also fixed on the basis of control and uncontrollable factors. So see that responsible fix. Otherwise, we can't expect this effectiveness, efficiency. Then second convention is management by exception. So M by E. So this is also one of the management principle, and see that the management communicating account information to top managements, right? It means that unnecessary account information need not to send the top management. Only the required information, the valuable information to send the management. It helps to take the right decision to avoid this waste of time. And the principle of key areas. So in financial accounting, the data is available, plenty of data available. But out of which, what we can do is the key points, key areas, like company sales, company cost, and some of the very important areas are IP ratios and debt equity ratios, right? And what are the changes to compare the industry? What is the impact? Like you say that in financial matters, that EBIT and EPS analysis, and the company capital structure, and the company cost of capital. So these are some of the key aspects the company wants to know that, right? Company in this way, the management can exercise a better control over the key areas, may matter resolve all the problems since key areas in the life of business concern. So in addition to this convention about three conventions like M by E, key areas, and other convention. Now, J. Batley, in his book, he wrote a book in the name of Management Accounting. He listed some of the conventions in management accounting concerned with recording of business transactions only. Right? Only business transactions is not considered these non-business transactions. Cost and revenue should be matched as per possible. So cost can be matched with revenue. Means you can't compare banana to apple. Both are still fruits. So we can't compare. There are two differences, right? All possible losses, future losses should be considered in the calculation of profit, but expected profit or unrealized profit should be all together. So we'll consider all future losses also. There should be consistency in and stability in methods, procedure, principles followed. So the management, these financial accounting people, they want to follow in consistency in using the methods. See that no, in calculation of labor cost, there are so many methods of the labor cost, and also see that issue of material. Also, so many methods are there: LIFO method, semi-average method, weighted average method. There's so many methods are there. In depreciation, also see that return on value method, fixed install method. So which method are we going to use? We can't change the management cannot be accountant cannot be changed the method every year frequently. So it is not good. It is not good. Why? Because if the method change, it influences figure. Right? Either cost increase or cost decrease. The form of cost accounting information should be designed to meet the special needs of business. So capital employed should be kept intact at current prices. So capital employed will see for current price, not for book price, or they will consider better to consider the market price. There should be integration of all management information. So integration is very important. So the integration between one department and the departments. So data of cost department, data of the production department, data of the sales department, data of the stores department, data of the advertising department. Like we need some kind of coordination is required. Needs integration required. Then only we can avoid the duplication of data, and the data it get good results. Direct cost should be approximated the cost center. So whatever the cost is there is already to concerned departments. Right? Management accounting should be looking forward So management reports and statements should be used for substantial personal dealing with context. So so this is the total block one. Block number one, there are 2 units. So far we discussed. Now we move to block number 2. Under the first part is financial statements. So what are the financial statements? What are the nature, scope of the financial statements? What are the different types of financial statements, right? So in block 1, any doubts? Block 1, any doubts? First block already explained 2 important questions. Block number 1, anyone? Anyone? Please respond, ma. Any doubt in block number 1? Hello?
No, sir.
No, right? So I explained 2 questions. I given 2 questions, right? Block
Sir,
number
can
1.
you share this PDF, sir?
Yes, I will share the PDF. I will share the PDF. No problem. Okay, I will share the PDF. Okay. So shall I move to block 2?
Okay, sir.
Yeah. So block 2 is financial statements. Financial statement, introduction of financial statement is 1. So financial statements are basically reports that predict the financial accounting information related to business. So a company management use it is to communicate the external stakeholders. External stakeholders are shareholders, tax authorities, regulation bodies like SEBI. So investors, creators also, the other parties also require this data. So there are different kind of basically the finance statements are, so we know that the balance sheets, profit and account statement, or it's called the income statement, statement of cash flows. Okay. So these are the basic. What is the nature of these financial statements? So finance statement prepared based on some facts related to events which are recorded chronological order. Okay. Chronological order based on this first day, second day, third day. See, it starts with 1st April to end with 31st March. Right? First record this and also whatever all the transactions are measured in terms of monetary value. So it is one of the principle is there, money measurement concepts. Okay. So we have to procedure all application rules, procedures. Finally, we also company may follow this GAP, generally accepted accounting principles, right? So based on that, so there are some nature of this finance statement. The first one is recorded the facts. The facts are recorded. So like what are the cash receipts, cash payments, what are the bank receipts, bank payments, what are the assets are there, what are the liabilities are there, right? And what are the current assets, current liabilities, what are the income sources of the firm, income sources also, what are the operating income, what are the non-operating income, right? So like what are all are facts recorded only. That's the first nature. The second one is accounting conventions. So we have Indian accounting standards as well as international accounting standards. So the company follows accounting conventions for preparing these, right? And they followed either when you evaluating this inventory, the firm can follow for cost price and market price. So whichever is less, right? Whichever is less, they follow. So like one kind of convention system is there in financial statement preparation. Third one is postulates. The postulates nothing but is convention, a big role in preparation of financial statements. The postulates basically we must see the, for example, going concern concept, postulate a basic a business well exists long time. So we have to treat the assets on historical cost base only. So postulates nothing but the firm go for years together. Perfect, goes together. No, the company go for 100 years, 200 years, it continue. So that is one nature. And thing is the personal judgment is also there. I mean that the accountants or this management see that how they judge that thing. For example, no, in our college, we purchased the 1 lakh worth of stationery in the month of April, right? But these stationery used for next 2 years. So it is capital expenditure or it's a revenue expenditure. So see that the firm, one of the firms, see that in a Pepsi company, so they appointed Virat Kohli as a ambassador is the paying of the amount, 5 crore rupees for advertisements. So these advertisement impact for next 5 years. So how we can treat the transaction? So this is the capital expenditure or it is a revenue expenditure, capital expenditure, revenue expenditure. How we can treat, it's a personal judgment, right? And also we can, when you calculating the depreciation also, okay. So which method is suitable? Either see that it is go for diminishing method or it is a fixed installment method. So which method is suitable depending upon this personal judgment. What are the objectives of financial? Why the companies are preparing the objectives? So every firm, the objective is very clear to know the company position where they are, right? Even stakeholders, including the company employees, customers, government authorities, regulators, lenders, okay, debenture holders. So all people want to know that the company performance, okay. So like the objective is very clear. The statements show an accurate stake of companies' economic asset and liabilities. So mean in terms of rupees. So stakeholders like investors, authority generally do not pass information to others. So all the assets and liabilities. It helps to predict the extent of a company capacity to earn the profit. So what is the company capacity to earn the profit? So if we buy a company share value today, so what is the value for next after 5 years? Is it really companies any capacity to earn or not? I mean the company is a growth firm or not? So what is the company capacity, right? The third one is effective of a company's management. Is the company management is effective or not? Right? What are the board of directors? Who are the board of directors? What is their specific skill? Are they expert in marketing? Are they expert in production process? Are they expert in any other fields? So it is also one of the key area for success of a company. So you can see the example of Infosys. So the Infosys, Naranamurthy, Nandanilekani, like so many stalwarts to play a very important role the growth of this Infosys company. To see the example of TCS, the growth. So the company success depending upon the management very important, right? See the Godrej, you see the Godrej company. They, then even the help the riders to stakeholder accounting policy is also very important. Understand the accounting policy is also comprehensive is important. And see that the management accounting also provides, the finance statements also provide cash flows. So what is the company cash inflows and cash outflows? Right? So company is able to pay, the company is sufficient liquidity position or not. If the cash flows are good, the company is able to meet all its expenses, mean the company is the optimum level of liquidity position. Or the company faces, see that most of the MSME companies in the pandemic period, they suffered liquidity problem. Right? So finally, they can explain the social impact of business. So what is the social impact of a business, either external sources or internal sources? So these are the major objectives of financial statements, right? So assets and liabilities and capacity to earn, efficient management, accounting policies, and also cash flow, right? So always is a trade-off between vice versa between profitability and liquidity and social impacts. So like these are the objectives. After that, now we move to types of financial statements. Okay, types of finance statements. So what are the different types? Basically, the finance statements are two. So that is balance sheet and statement of profit and loss account, or it is called as income statements. So what is the balance sheet? Anyone, please? Please, anyone, what is the balance sheet? What we can understand the balance sheets? Anyone? Why we prepare the balance sheets? Anyone, please respond. Please respond, Kalyani Garu, others, Reshma, Vijay Durga. Please, ma'am, what is mean balance sheet ante? Asti appala patti ante? Hello? Anyone, please respond. What is mean by balance sheets? Hello? Yes, ma'am.
Know about the assets and the liabilities.
We know these assets and liabilities, right? That's it. Any other thing is there? Any others? Please respond. Kalyani Garu, Mukhtar, Sheikh, Reshma, Vijay Durga. Others, please respond. It's not one way, it's not a TV channel, right? It's a two-way communication. So what is a balance sheet? So balance sheet is a mirror of a firm. So balance sheet is showing that the company position, where they are, what are their assets and liabilities, right? And it is prepared based on the in one point of time. It's not a period of time. They consider the point of time. In a point of time, what are the company assets and company liabilities? In assets also, what are the current assets? What are the current liabilities? Right? In liabilities also, what kind of liabilities are there? Short term and long term. What is the company? Is a debt company or debt-free company? So, like no, it is a mirror of the companies. So as per this Companies Act 1956, Schedule 6, so companies generally cannot deviate the formats. Have you seen the real company balance sheet? Anyone? Choose a company balance sheet too?
No, sir.
Real company balance sheet. I will show you the real company balance sheet. Wait a minute. Wait a minute. I will show you this. Now you see, this is the company balance sheets. What is the company name? What is the company name?
Tata Motors.
Tata Motors. It is a see that the real company's balance sheet. The balance sheet are prepared. They are in vertical model, not the horizontal model, right? So this is a standard format given by this Companies Act. See that here they are mentioning 2 years data, right? See here the 2 years, previous year and current year, right? When you prepare in class, we will take only 1 year figures, right? 1 year figures. But whereas in real, the company has to prepare, they consider 2 years data, last year and current year. See what are the headings in balance sheets? Anyone please read it? What are the headings in the company balance sheets? What are the assets? What are
non-current assets, current assets.
Non-current asset and current asset, right? So non-current is nothing but is a fixed assets. What are the fixed assets? Property, plant and equipment, work in progress, machinery, goodwill, right? Intangible assets, other intangible assets, intangible assets under development like financial assets, investments, loans and advances, other financial assets, non-current tax assets. So like these are the company real balance sheets. And we can see that liability side of a company. So here equity is given, other equity is also given. Equity and other equity. So liabilities are current liabilities and non-current liabilities and current liabilities. Under non-current liabilities, you can see that financial liabilities, borrowings, other financial liabilities are there, and provisions, deferred tax liabilities, right? Other non-current liabilities. So current liabilities are very clear. See that borrowings, trade payables, nothing but our creditors, and outstanding expenses, outstanding dues for micro and small enterprises, outstanding dues of creditors other than these micro and small, and acceptances, other financial liabilities and provisions, current tax liabilities. So like see that this is the company real balance sheet of this company, Tata Motors. Let us see one more is statement of profit and loss accounts. So here also you can see that these 2 years data, right? Amount in crores, amount in crores, 2 years data. We can see that revenue from operations, right? This is called as the operating revenue, operating profits, revenues, other operating revenues other than this vehicle sale, total revenue from operations, both including revenue, non-revenue, and total income, include government grants, income, the expenses are there. Like all are the items are mentioned here. Here also 2 years, you can see this data, signatures, concerned authorities. Okay. Then we go for cash flow statements. So this is the cash flow statement. The cash flow statement are all activities are categorized three areas. See that cash flow from operating activities, cash flow from operating activities before changing the following assets and liabilities, changes in the cash flow from investing activities, cash flow from financing activities. The total that we'll discuss in elaborate in upcoming sessions, right? Now we'll move on our wait a minute. Right. So here, as per this Companies Act, there is a specific format is there. So all the company have to follow the same formats. So what are the contents? We also now discuss the contents are, see that the first one is contents balance sheets, share capital. Under share capital, so we'll see that capital reserves, redemption reserves, debenture redemptions, security and premium reserves, surplus funds. So like these are the items are there. And current and non-current assets. So current asset means it is a less than 12 months. Non-current means is more than 12 months. The borrowings are there. Either short-term borrowings or long-term borrowings. Or nothing but it is a current borrowings and non-current borrowings. Current borrowings nothing but less than 12 months. And non-current means more than 1 month or 1 year. So example for large bank loans, generally non-current in nature. So other countries, those are shorter repayments are there. The investments. So investment is also same. Current investment and non-current investments. So current investment nothing but less than 1 year. And current means less than 1 year. Non-current means more than 1 year of business. And see that these are the basic contents in the balance sheet. Coming to the statement of profit and loss account. So earlier I showed you this Tata Motors income profit and loss account. Statement from operations, revenue from operations, and other incomes. Other than this revenue, income, see that including income on interest, dividends, non-operating income, income from other sale of investments, also considered other incomes. So expenses includes cost of material, work in progress, stock in trade, financial cost, depreciation, all are included the expenses, right? So after this, we can see the what are different types of forms. Already I show you the forms as per the company 1956, shareholders funds, so share capital, reserve and surpluses, money receivables and against the warranty, share capital. So like these are the items in this company balance sheet. Third one is reserves and surpluses. Under reserves, what are the different kind of reserves are there? Capital reserve, capital redemption reserve, debenture redemption reserve, securities premium reserve, share options outstanding accounts. So money related classification of current and non-current items. So liability side, fixed assets, the investment, cash and cash equivalents also there. So then these are these items. So what are these users of, who are using these financial statements? Who are the users of financial statements? So ఎవరికి అవసరమండి financial statements? Who are the users of financial statements? Financial statements are
management accounting.
Management as well as ఇంకెవరు అవసరము?
Government owners, business owners,
government, tax authorities, ఇంకా regulators, company employees. The company employee is also important to know the financial statement, right? Why? Because they can expect their salary hike, right? So employees, customer also know that the company performance. Why? Because the company could performance better, say that the customer is a good fooling, the product is a quality
general
product.
Public also.
Yes, general public is also they want to financial statements, right? So, and also see that the some of the agencies also required FICCI, okay, industry, industry unions also there. They want to know that company performance. Even governments also know that the company industry growth. See that the now emerging sector is automobile industry, EV, electric vehicles. So government wants to know that the growth of this electric vehicle industry this year, right? The government also know that financial statements of this electric vehicle industry, how they perform, right? So like bridging the gap between management, the financial information, providing all the liabilities and assets, what are the profit, what are the expenses are there. So this is help for management to fill the gap, what the owners are expected and what the management does, right? So in a company, investors, shareholders are differ, management is differ, right? So it is a what we call agency problem. Owners వేరే వాళ్ళు ఉంటారు, ఇన్వెస్టర్స్ వేరే చోటు ఉంటారు, ఇన్వెస్ట్ చేసిన వాళ్ళు, కానీ డిసిషన్ తీసుకునే ఎవరు? మేనేజ్మెంట్ కదా. సో దీస్ దట్ ద ఫైనాన్స్ స్టేట్మెంట్ ఫిల్ ద గ్యాప్ బిట్వీన్ దిస్ మేనేజ్మెంట్ యాజ్ వెల్ యాజ్ ది ఎక్స్పెక్టేషన్స్ ఆఫ్ ఓనర్స్. ఎక్స్పెక్టేషన్ ఓనర్ బట్ షేర్ హోల్డర్స్, రైట్? సో ఆన్ బిహాఫ్ ఆఫ్ షేర్ హోల్డర్స్ ద మేనేజ్మెంట్ విల్ టేక్ డిసిషన్స్, అంతేనా కదా. సో ఆల్ ది షేర్ హోల్డర్స్ ఆర్ నాట్ పార్టిసిపేట్ డే టు డే యాక్టివిటీస్ ఆఫ్ ద కంపెనీ. On behalf of the shareholders, the few people are appointed or elected as a management team, like CEO, CFO, so sales manager, purchase manager, procurement management, financial manager. So like different people are there, right? So availability of credit from lenders. So see that if you borrow funds, they're asking your company balance sheet, the firm balance sheet, right? They're asking for financial statements. They want to know that if the bank give the loan, the amount is safe or not. Okay, as a employee man loan తీసుకుంటే ఏం అడుగుతారు మనకు? యాజ్ ఏ ఎంప్లాయీ గవర్నమెంట్ లోన్ తీసుకున్నాక ఏం అడుగుతారు? నా పే స్లిప్ అడుగుతారు, నా బ్యాంక్ స్టేట్మెంట్ అడుగుతారు. ఎందుకు అడుగుతారు బ్యాంక్ స్టేట్మెంట్, పే స్లిప్?
Whether he is able to pay or not.
Yes, similarly the companies also even the banker financial is asking for this company's income statements, company's balance sheets. So know that the company position where they are. If we give the loan, the amount is safe or not. Okay, what is the proportion of debt the company is there? Okay, what is the debt? What is the liabilities are there? And what is the company profit for this year, last year, previous? They are comparing last 5 years, right? Comparing the uses of investors. So investors are very most concerned about this financial statements. See that investors are movement in before declaration of financial statement, Q1 reports and financial reports. So ఏం చేస్తారు స్టాక్ మార్కెట్లో? ఏదైనా కంపెనీ తన రిజల్ట్ ప్రకటిస్తుంది అనుకున్నప్పుడు 1 week ముందే is a high volatile, right? See that Infosys company declaring is Q1 results. All other companies also eagerly waiting what is the result of this Infosys company. And see that in the month of April, May, now we are going to expect this financial year performance of each companies. Very much eager. See that the company performance is good, the share value may go up. If the company performance is poor, definitely the investor, they are not ready to hold the company share, they're ready to sell the company share. Right? It's a possibility of movements. Okay. So subject name is financial management accounting. Okay. The uses of government. So government is also very most concerned. So like government has making some policies, giving subsidies, giving these tax relaxation. They want to encourage exemptions, want to give. See that already I told you this government, no, EV electric vehicle sector, like the solar power, right? So like wind power, like the government policy pertaining corporate depending upon the heavy financial statement. If the company, if the sector growth, it's good. Otherwise, the company, they want to encourage, government is also encouraging, right? And use of stock exchange. See that the regulation body like SEBI, other stock exchange, BSE, NSE, and other people, other agencies, they want to know that company performance. So I will show you how this data will useful to the management stock brokers, right? So stock broker, they want to company data for knowing the company performance, right? So SEBI also know that the company performance. SEBI is a watchdog of both stock BSE and NSE, right? So this SEBI is the major objective is to protect investors' interest. See that SEBI can assess the company's internal matters using them to ensure the protection of investors. So recently, 2 or 3 cases, SEBI intervenes and see that how the company performing, right? Even stock advisors required to frame these codes, all these. See that information on investments. The shareholders of a company release this statement, understand how these investments are paying of a company payoff, right? So regarding the stagnant profits or even losses. So all this data is very important for information regarding the investments, right? So what are the limitations? What are the limitations of financial statements, right? So financial statements, the limitations also very serious. So not a reflection of the present financial position. So financial statements are prepared based on the historical data, the things already over, right? So see that, can we compare the previous year performance to this year performance? Can we compare 20 pandemic financial position to this financial position? We can't compare, right? Why? The pandemic position, all companies may not get good profits. All MSME, they have suffered. Only few companies, they are performing well during the pandemic period also, right? So not reflection of present financial position. Why? Because whatever you prepare, the data is past data. Things rapidly change. No, see that the crude oil price rates and now the crude oil price rate and last 6 months crude oil price rates. See that Asian Paints, the stock. The Asian Paints, one of the major input is petrol, diesel, crude oil basically. The price of changes, right? So that will influence the company profitability. And see that personal possibility of biases. Finance statement might be not always been accurate. No, we know that window dressing. Window dressing. Window dressing.
No, sir.
Window dressing. So window dressing ఏం చేస్తారు, కంపెనీ పర్ఫార్మెన్స్ సరిగా లేకపోయినా కూడా ఏం చేస్తారంటే they are making a good balance sheets like Infosys company. Sorry, but not Infosys, I'm extremely sorry. Satyam company. So they don't have any financial reserves, but still they are showing the reserves are there, cash reserves are there. Window dressing means what? The window is dressed very well. ఇంటి బయట చాలా మంచిగా అలంకరిస్తాం మనం, కానీ ఇంటి లోపు ఏముండదు. మనం ఏం జడ్జ్ చేస్తాం, ఇంట్లో పోయి చూస్తాం, ఇంటి బయట జడ్జ్ చేస్తాం మనము. న్యాచురల్గా విల్ సీ అవుట్ సైడ్, సీ దట్ ద హౌస్ ఇస్ వెరీ గుడ్ అండ్ దే ఆర్ వెరీ రిచ్, లైక్ వి అజ్యూమ్ దట్. కానీ లోపల ఏముంటుంది, ఏముండదు లోపల. అదే కూడా ఏమవుతుంది, కొన్ని కంపెనీస్ దే ఆర్ ప్రిపేరింగ్ ది వెల్ బ్యాలెన్స్ షీట్స్ like Satyam company, right? It is possibility of personal biases. How this, how we can improve. See, I will tell one example here. So this is sales, and this is the profits. So sales is, this is the cost kada, 100 rupees, and here the cost is 80. The profit is 20. Profit is 20. Suppose if the selling price increased to 150, the cost is also see that it is 120. What is the profit increase here? What is the profit here? What is the profit here? Here, what is the profit? What is the profit here? 30 rupees profits. Can you compare this situation? What is the company profitability in terms of percentage? Here you can see that scenario 1, the profit is 20%, right? But you can compare here, the profit is 15%. Now, what is your interpretation? What is your interpretation? Profit increase or decrease?
Decrease, sir.
Profitability is decrease. The profit terms is increase, right? Amount perigindi ikkada manaku. 20 rupees to 30 rupees అయ్యింది. కానీ what is the profitability here? It's only 15%. So నువ్వు ఇంటర్ప్రిటేట్ చేయాలి. So you want to interpret, what we can do is to compare a previous year. This year the profit increase 30 rupees. Earlier it is only 20 rupees. Now it is 30 rupees. అట్లా రాస్తారు. యాక్చువల్గా ఏం జరిగింది ఇక్కడ? The
window dressing, sir.
Profitability, window dressing. Right? Window dressing. See that how the thing is same. How best we are manipulating the things, right? So like, sir, which unit we are in? The unit number, block number 2. Block number 2. Okay, unit 3.
Sir, window dressing cheste daniki అంటే లీగల్ గా ఏం లేదు సార్.
సో లీగల్ తెలియకుండా చేస్తారు వాళ్ళు.
Okay, sir.
They are very smart. They are very smart. We are doing that things, right? Absence of vital information. See that they can absence of vital information. Information also they are hiding. They can't show the very important. Say that example nature of agreement signed by the companies is important information, but it is not never mentioned in the annual statement. So right, the company orders వచ్చాయనుకోండి, company orders, some agreements are there. They are not mentioned. It is a agreements are non-financial information. The financial statement showing only financial data. So the agreements, orders are not showing in this financial data. They are absent. So whenever they are required, they are showing the these agreement. The company see that before result, after result, what happened in the company. మీ ఒక్కసారి చూడండి, స్టాక్ మార్కెట్లో ప్రైస్ ఎప్పుడు మూవ్ అవుతుంది, ఎన్ని సెకండ్స్ మూవ్ అవుతుంది స్టాక్ మార్కెట్లో ప్రైస్? ఎవ్రీ 15 seconds కి ప్రైస్ మూవ్ అవుతుంది. 15 seconds అంటే నిమిషాలు 4 సార్లు మారుతుంది కంపెనీ ప్రైస్. ఎయిదర్ అప్ కావచ్చు, ఎయిదర్ డౌన్ కావచ్చు. 15 seconds లో కంపెనీకి ఏం మారుతుంది? కంపెనీ ప్రాఫిటబిలిటీ. 15 seconds లో ఏమైనా కంపెనీ లాభాలు నష్టాలు మారుతాయా? కానీ ప్రైస్ ఎందుకు మూవ్ అవుతుంది అక్కడ? ఎందుకు మూవ్ అవుతుంది స్టాక్ మార్కెట్ ప్రైస్ రేట్స్? సో 15 seconds, no change in the company profits, right? Either company profits may not go up, may not go down, but still see the market movements. Okay, so lack of qualitative information. So the information may not be provided all. So company annual statement, lot of quantitative data is speaking. Skip in the detail of the company industry relations, employee productivity, employee relations, right? Government, they are not mentioned all these. They can show only the numerical data, job is done. Okay, lack of details. So they are not mentioned the total value of assets. See that the value of assets are different for period to period. Ante kada same untaya value of assets. There is a lot of difference between book value and market values, right? Book value and market values. So which one they will consider? They considered most of the cases the book value is considered. Okay, the book value is considered. Okay, and after this, wait a minute. So then I will show you one more. Right. Now screen is changed. Hello. Hello.
Yes, sir.
Yes, sir.
Yes. So these are the basic data of financial statement to arrange systematic after all this. So what are the financial statement? The financial statements basically income statement. Wait a minute. Right. So what are the financial statement broadly? Anyone please read it? What are the financial statements now onwards? What are the
income statement,
financial statement,
income statements,
balance sheet,
Statement of changes in financial position.
Then under there are two statements, right? There are two statements.
Fund flow statement, cash flow
statement. So today onwards, what are the finance statement? The finance statements are income statement, balance sheet, fund flow statement, and cash flow statement, right? It is clear, right? Now, so here now finance statement, income statement, nothing but it's a profit and loss account. Here we show that the revenues and matching concept, we followed matching concept. Right, balance sheet you know very well. It is period end of every accounting period, and show the values of all the assets and liabilities exhibit in financial position of a concern. Okay, the statement changes in financial position. So statement changes financial position means financial position to compare previous year to this year or yesterday today's. So like we will compare previous year data to this year. What are the changes happen in both fund as well as the cash position also? Okay, then after this What are the cash flow statement, fund flow statement? We are also going to discuss elaborating tomorrow. Show the inflows and outflow of funds of an entity at the end of accounting period during 1 year. Funds refer to working capital, and the statement exhibit various sources and use of funds. So what are these inflow of funds, outflow of funds? What is meant by flow? Flow nothing but is a change. Flow and it is a change. It's the only change, right? Inflow and outflow. The cash flow statements. So cash flow statement shows inflow of cash and outflow of cash of entity at the end of accounting period. The cash refers cash in hand, cash at bank, short-term investments, cash and cash equivalents are called cash flow statements. So this statement exhibit various sources of use of funds are the same. And the finance statement analysis. So why you're going to analyze the finance statement? So we analyze the statement for a systematic manner and critical manner, and to know that effectiveness and more meaningful information is required for different users. So it is basically postponement of historical activity, transactional activities. So to judge the operational ability, profitability, solvency, managerial efficiency, and overall performance of entity. So if we analyze these financial statements, we'll get the ultimate answer in this one. So operational ability, what is the company's operational ability? They are operating very well or not? So are they using all these sources are effectively or not? Okay. The second thing is, so if they effectively utilizing all the resources, is the profit increase or decrease? Profit compare it previous year, this year. For comparing our firm this year to last year, at the same time, we will compare our industry to other industries, similar industry, a similar company. What is their profit? What is their sales? Okay. And management efficiency, how management will take the financial aspects, marketing aspect, all the aspects, and overall performance of company. Okay. Then the finance statements, there are 3 different types of analysis. One is business analysis, the types and components, and also the statement on the basis of finance statement basis of business activities, financial statement and business activities, additional information. And third one is finance statement as overview and basic valuation models, right? Analysis in an efficient market, and analysis tools also there. Okay, analysis tools also there. Any doubts in between? I will take a snap. Please wait. Any doubts? Hello, please respond.
No, sir.
No, sir.
No, sir.
Wait a minute. Right. So, any doubt, ma? Any doubts in chapter number 1 or 2 or 3? Please, any doubt? Otherwise, we'll close the session today. Any doubts?
No, sir.
Okay. So, I already given 2 important questions, block number 1. Okay.
It's the differences and distinctions between management accounting and financial accounting.
Done. One more question. One more question.
Cost accounting, sir.
No, one question is define management accounting, right? Explain nature, scope, objectives of management accounting. That is question number 1. Question number 2, discuss the relationship between financial accounting, cost accounting, and management accounting, right? Is it clear?
Yeah.
Yes, sir.
Okay, done. Okay, now I'm closing session. Tomorrow we'll same as usual.